Hey everybody from Atlanta REIA, it's Dave Lindahl here, and first of all I want to thank Dustin for giving me the opportunity to teach in front of you guys again. I know it's probably been about a year and a half or so since I've been down there, and we've been trying to work it out with our schedules for me to get back, and I thought, well, the next best thing is send down a video and show what's happening in the marketplace right now and how you can use that information to go out and make some money. So that's exactly what we did. I created a video for you, and this particular video is on emerging markets. And what you can do is, when you get through that video, is literally take that information, you're in a great market right now, go out and use it and make some money. And at the end of the video, we sent out a couple of gifts as well. We sent out a CD for people just like you that are doing this, and you get some great information from that, and a book that I wrote as well on how to create massive passive income. That's really what it's all about, creating massive passive income. And I love coming down to Atlanta. It's one of my favorite cities. There's always something going on. It's always a challenge to try to get to that something going on because of the traffic. But I love Atlanta, and hope to be down there soon. But in the meantime, take a watch of this video and learn about emerging markets. Hey everybody, Dave Lindahl here, and tonight we're going to talk about one of my favorite subjects, which is emerging markets, a subject of which I actually wrote the book on, emerging real estate markets. And I learned about 14 years ago that markets go up and markets go down. And after I started investing and made a lot of money in a very short period of time, I realized that I was going to lose that money because my market was changing if I didn't move my equity into other markets. So we're going to talk about emerging real estate markets and why they're so important. And I'm going to give you the characteristics of each particular market phase, because in any particular market there are 4 phases of a market cycle. And in each one of those phases there are key characteristics that you've got to recognize so that you're doing the right strategy at the right time. Because investing in the right market at the right time using the right strategy, you make a lot of money. Use the wrong strategy at the wrong time, you could break even, or worse, you might even lose some money. So the whole idea behind emerging markets, or even the 4 phases of the market cycle, is the fact that you have the opportunity to look into the future, like having a crystal ball, and seeing what's coming at you. See, what happens is a lot of real estate investors, they start investing and they start doing well and they start making some money. Then all of a sudden they're not making as much money as they were before, and they're not getting as many deals as they were getting before, and they're still doing the same things that they were doing before, but they just can't figure out what's happening. Well, what's happening is the market's changing, and they're not changing their strategy. So with the use and knowledge of market cycles, you can actually be investing in your own backyard in each phase of the market cycle and make a ton of money. Or you can do what I do, or because I'm always investing, I'm from Boston, just south of Boston. You can do what I do, and that is invest in my own market phases and be investing in emerging markets throughout the United States. So emerging markets or market cycles gives you the ability to look into the future with a crystal ball, see what's coming at you, and make the changes before it comes. And when you make the changes before it comes, that gives you the ability to really maximize your profits on each of the deals. Because as a real estate investor, we want to get the most amount of money in the least amount of time with the least amount of risk. All right, so in the 4 phases of the market cycle, we've got the seller's market phase 1, the seller's market phase 2, the buyer's market phase 1, and the buyer's market phase 2. And as I said before, that every particular market has a key characteristic and a key strategy. Use the right strategy at the right time, you make a ton of money. Use the wrong strategy at the wrong time, and you could break even, or worse, you might even lose some money. So here are the 4 phases of the market cycle. I want you to write these down. I want you to put this graph down in your notes, okay? Because we're going to be working on this. So we have the buyer's market 1, we have the buyer's market 2, we have the seller's market 1, and we have the seller's market 2. All right, so the key thing to note here is that each one of these phases, okay, they always follow in this particular order. A buyer's market 1 follows a buyer's market 2, follows a seller's market 1, followed by a seller's market 2. They never skip each other. There's not the ability to skip each other. So what does that mean? That means predictability. That means that we can predict what's going to be happening before it actually happens. That means that we can change our investing strategies before it actually comes, before it passes us by. Okay? So to get from the top to the bottom, a full market cycle typically takes between 8 to 12 years. So you want to write that down. A market cycle typically takes between 8 to 12 years. Now, the time between these phases, the buyer's market 1 and the buyer's market 2 and the seller's market 1 and the seller's market 2, Well, those phases typically take between 3 to 5 years, depending on how dynamic your market is. All right? So what we're going to do is we're going to go through each one of these phases. I'm going to give you the key characteristic of this phase, and I'm going to give you the key strategy that you're going to want to be using for each of those phases as well. So let's start right here with the seller's market 1. Okay? Now with the seller's market 1, what we're doing is we are in an up phase in the marketplace. Okay? In the seller's market 1, what's happening is the market is in full swing. This is actually the second half of an emerging market phase. All right? So there's a lot of demand in the marketplace. There's a lot of job growth in the marketplace. There's a lot of properties that are selling pretty swiftly in the marketplace. Construction is now full swing in the marketplace. And because of this, because demand is the key characteristic of this particular market cycle, and you want to write that down, or this particular market phase, the key characteristic of the seller's market phase 1 is the fact that demand is at its highest point. And because demand is at its highest point, you can do the 2 key strategies of investing in real estate. And there are really only 2 key strategies. There's the buy and hold, and then there's the flip. And because demand is so high, you can do both buy and hold and flip in a seller's market phase 1. It's the only phase in all of these 4 phases that you can be doing both strategies at the same time and maximize your profits. You can flip properties because demand is so high. There's a lot of people out there that want to be buying properties. So you can flip a property quickly, put some money into your pocket quickly. Or you can hold on to a property and watch it appreciate because there's still a lot of upside left in the emerging phase of this particular cycle. So the seller's market 1, okay, here's the thing with the seller's market 1. One of the key things is right about here. That line represents when properties are going on the market and they're selling same day, and they're selling for more than what they were put on the market for. There's like a bidding war. And you know, we had that going on a few years ago in the marketplaces. Who remembers when that was going on? I mean, just about, I see some heads nodding out there. Yeah, that happened, and it will continue to happen in the future because it's a market cycle, and it's going to come back to that. And a lot of people think that, oh, that's the sell time. This is called the local paradigm. You think that, oh my gosh, you know, prices are going crazy, properties are going on the market on the same day, they're selling on the same day, they're bidding the prices up, they're way too expensive, I'm not going to be buying these properties anymore, I'm going to sit on the sidelines and wait to see what happens. Well, that's a mistake because typically there's still another 6 months to a year left in the emerging phase of that particular cycle. I'm not talking about the entire upside, I'm talking just about the seller's market phase 1. So don't fall into the local paradigm. The thing you want to do is when you get to about this point right here, okay, this is the transition spot. When you get to that point right there, that's typically when properties go on the marketplace and they start to stay in the marketplace for between 7 to 10 days before they go into contract. Now remember, it was really heated up here. Properties were on the market for a very short period of time, anywhere from 1 to 2 days at the most. Down here at the transition point between the buyer's market 2 and the seller's market 1, properties are on the marketplace anywhere from 30 to 45 days before they go into contract. That's what I'm talking about. And then here, they tend to go on from 7 to 10 days. And when you start seeing properties go on the market for between 7 to 10 days, that is the time that you need to start selling properties. That is one of the leading indicators. You know, when we look at, the market cycles are all about economics. And we look at economics, we take a look at leading indicators and lagging indicators. One of the leading indicators, one of the telltale signs that you've got a market that's just about to roll into a seller's market phase 2 is how long does it take to get properties under contract. And when it may wobble from 1 to 2 to 3 to 4 to 5 and then come back down to 1 and 0. But when it starts hitting 7, 9, 10 days, now it's time to, that's the clearest signal to start selling everything. You want to sell, 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 because now you're in what's called the seller's market phase 2. And let me just clear this off a little bit. Clear my board here. And in a seller's market phase 2, that's this phase right here. That's the big dome, okay? In the seller's market phase 2, what's happening is sellers are still getting inflated prices, but it's taking longer to get those inflated prices. Properties are coming onto the marketplace. The market starts becoming oversupplied, which is one of the key characteristics of this particular phase. I want you to write that down. The market starts becoming oversupplied. Okay, so the market becomes oversupplied, and what happens is more and more properties come onto the marketplace, and eventually somebody lowers their price. All right, and once somebody lowers their price, all of a sudden everybody starts lowering their price, and you start going on the flip side of the seller's market phase 2, and that's the beginning of the downward cycle. So when you're holding properties in a seller's market phase 1 and you realize you're going into a seller's market phase 2, even though there's still meat on the bone, look, we've got plenty of room here, and that actually represents anywhere from a year to 2 years in the marketplace. And you might be thinking, oh my gosh, I'm going to miss 1 to 2 years of a rising market. And the answer is yes. And the simplest response to that is what one of my mentors told me back when I was investing, when I first started investing in real estate. He told me, he says, Dave, he says, you always want to leave a little meat on the bone. Leave a little meat on the bone for the next guy. And when you do that, number 1, you sell quickly. And number 2, here's the big problem. You don't know where the height of the market is. You don't know where that dome is. Okay, the only way to tell when the market has peaked out is when the market actually starts going down. When you can turn back and say, oh, that was the top of the market. That's the only way to know. There's no other way to predict it. So the 2 key characteristics of a seller's market phase 1 is, number 1 is the market becomes oversupplied. Number 2, job growth begins to slow. That's a big one. You want to write that down. Job growth begins to slow. Your strategy in this particular market is to flip properties. No buying and holding anything. You know, even if it's a great deal, you get great cash flow, listen, you're going to get an even better deal when that market starts falling down the other side. You know, there's an old adage in real estate investing, which is don't grab onto a falling knife, all right? Any property that you can buy at the top of a seller's market phase 2 or just over the other side, you can get it a much better deal just a year, year and a half, 2 years later. Okay, look at all the deals that are available right now because of the recession that we just went through. It's just it's a great time to be in the market. I haven't seen a market this great since I first started investing over 17 years ago in the marketplace. We are just licking our chops, and we've got quite a few deals on the contract right now. We closed on quite a few last month, and it's just an exciting time to be in the market. I call it the big property grab. The big property grab because really the window, I've been through this a couple of times before in the market cycle, okay? The window of opportunity right now is open for the next year and a half, 2 years. All right, and then what's going to happen is the market's going to really start taking off. The economy is going to really start coming back. There's going to be a lot more investors in the marketplace because everybody's going to start getting interested in real estate again, and the prices are going to go up. So what's it going to be like 2 years from now when there's more people out there competing against you and you're buying at higher prices? Now is the property grab. Grab as much as you can. I grabbed as much as I could 17 years ago, and it made me very wealthy back then in a very short period of time. It's the exact same situation today. So you just want to hop onto it and start doing it. Property grab. All right, so going in from the buyer's market phase, the seller's market phase 2, we're going into a buyer's market phase 1. So I'm just going to, let me eliminate this and let's go into the buyer's market phase 2. And let me tell you a story as I'm doing this. You know, people, when I first started teaching, and I started teaching about 7 years ago after I had amassed a lot of properties, and I continued to buy. You know, when I first started teaching, I owned just about 1,400 properties. Today I own over 7,000. But people used to say when I was teaching, they said, oh, Dave, you know, it's so easy for you to do it because back then prices were so cheap and there was a lot of deals out there. So, you know, it's much harder to get started in today's market. Even though today, and as I was out there teaching at the same time, I'm out there buying properties. I continue to buy properties. I've got this big office now. It's in Dallas, Texas. It's where my headquarters is. And that's where my real estate investment company is. And my teaching company is up here in Boston, Massachusetts. I go back and forth on a regular basis. The information that we learn from buying our properties is brought right here to Dallas to be shared with people like you, so you can go out and start doing this. So now the market is exactly the way it was when I first started, and now nobody can say, oh, you know, for Dave Lindahl it was so easy because, you know, the market was at the bottom and he scooped up a lot of properties. So just scoop up properties now. It's a really, really good time. And let's talk about the buyer's market, or the buyer's market phase 1. Buyer's market phase 1, what's happening here? Prices are going down. Property values have dropped to the lowest level in all phases. New construction is non-existent in the marketplace. Banks aren't lending, all right? And demand is at its lowest point. Sound familiar? Yeah, most of us have been through that. Just about every market in the U.S. has been through that over the last few years. Good thing is a lot of markets are coming into the buyer's market phase 2 right now. This is why it's so exciting. But in the buyer's market phase 1, your strategy is to buy and hold for cash flow only because there is no appreciation in a market like this. But you can be getting some really, really good deals. Property grab, stick them into your pockets and just wait for that market to change, because you're going to get them at their lowest point or very close to their lowest point. Now, the key characteristic of this particular market is that demand is at its lowest point. So you want to write that down. Demand is at its lowest point. Now, the other thing here is there's one thing that's going to change your market. Well, not just one thing. There's a lot of different things that change the real estate market. But there's one thing in particular that we look for. There's one thing that I'm scouring the United States, Canada, and the world to find out if this is happening in a particular market. And what this thing is called jobs. Jobs and job growth. Okay, I want you to write that down. Jobs. And typically what happens is over here in the marketplace, you're going to hear about job announcements. Okay, so there are three different types of phases when we see jobs coming into the marketplace. There's the job announcement, there's the job construction, and there's job fulfillment. So write that down. Job announcement, job construction, job fulfillment. They announce that new jobs are coming into the area. Okay, even though the market hasn't turned yet, all right, the local people in that particular market realize what's happening. They know that jobs come in mean the market is going to start correcting itself. They start buying things up. That's the first turn in the market. This is a great time to be in the market. If you're in a market like this, at this particular point, you're considered a contrarian investor because you're buying when everybody else is trying to sell their properties. And look at this. We've got people that have been in this particular phase of the market, okay? They've been trying to sell. There's nobody out there buying, and all of a sudden you come along and you start buying. And you get really, really good deals in this particular phase of the market. So the job announcements start coming in, and then it takes about maybe 6 months, a year and a half to start permitting these job announcements. When I say permit, they got to build a new manufacturing plant, a new biotech plant, a new corporate headquarters. That's what we're looking for. We're looking for jobs, 100 jobs, 500 jobs, 1,000 jobs, 5,000 jobs, okay? Boeing just created a new plant outside of Charleston, Carolinas, from one of the Carolinas. I can't ever remember which is north or south. But it's created 10,000 new jobs coming into the area. Volkswagen outside of Chattanooga, not too long ago, maybe a year and a half ago, brings in a couple thousand new jobs because they're building a plant there. We want to look for big movements in jobs because there's always a multiplier effect. When they bring in one job, there's also a multiplier of service jobs that come with it. The butcher, the baker, the candlestick maker. There's a multiplier of anywhere between 1 and 5. The higher the white-collar workers that come into a particular area, the higher the multiplier effect. But so for every one job that comes in, there's up to 5 additional service jobs that are created because of this. And that's really, really exciting as well. So we have the job construction. And when they pull these permits and they finally start building these facilities, okay, it's the construction workers that now start migrating in from other parts of the countries to start working in these particular areas. Now, they're not going to stay. They're just going to where the jobs are. Some of them stay, but most of them, they're just there to work out the boom, and then when the boom's gone, they go to the next boom. So what do? They rent apartments. So this is why apartments always go up first in an emerging market. You know, in terms of commercial real estate, it goes like this. Apartments go up first, storage goes up next because people need to store things. They start buying things, so retail goes up next. Retail starts selling stuff, so they start holding stuff in warehouses, so warehousing goes up. And then we have single-family houses come up in the last, usually lags about a year. So we have the job construction, which is starting to happen around here, and then we have job fulfillment. I call that JF, job fulfillment, which happens right over there. Job fulfillment are the people that are going to come in and they're going to house those jobs long term. So the job fulfillment is the people that are coming into the area. Now they're going to rent apartments too. Why? Because they're not quite sure of the area yet. They're not quite sure if this is where they want to live. Okay? They're not quite sure if the job's going to work out. So they'll rent for a year and then they'll go into single family houses after that. And that's another reason why single family housing lags apartment housing in terms of market cycles. So from the jobs and the job growth, all right, we go into what we call the buyer's market phase 2. Let me just clear this off. In the buyer's market phase 2, that's right here. This is the emerging phase of the marketplace. This is the millionaire maker. This is the most exciting time because in a very short period of time, 3 to 5 years, you know, even shorter where the markets are right now, but in a very short period of time, you can earn enough equity and cash flow to retire for life. You know, if you will do for 3 to 5 years what most people won't do, you'll be able to do for the rest of your life what most people can't do. And that is just so true in this particular market right now. So here's the key characteristic of a buyer's market phase 2. The key characteristic is this. is that rents have started to rise for the first time after a number of years of being stagnant. So when you start seeing rents start to rise, you've just gone from a contrarian investor over to a momentum investor. And that's really exciting too. As a matter of fact, it's great being a contrarian investor because once the rents start to rise, that's the thing that us national investors look for in particular areas. We're scouring for job growth and rent that are rising. I just saw a report in one of the local periodicals that I get that of the 25 major markets, 23 of them experienced rental increase over the last quarter. That's huge. That's huge. The majority of the country right now is poised to either start taking off or has already started taking off. Of course, you don't hear about it in the news, all right? Because the news only wants to tell you bad news. But if you can understand these market cycles and get in at this particular point in time, learn as much as you can about this, and go out and start doing it, you can start following your passions. You can literally start following your passions. I know that you want to, for some of you, real estate is your passion, like me. I absolutely love real estate. But for others, it's the vehicle that they use to create wealth so they can follow their passion, right? It's the thing that you love to do when you wake up on Monday morning instead of waking up thinking, oh my gosh, do I have to go to that job? You wake up thinking, I'm going to get up and it's Monday morning. I'm going to start doing my passion again, whatever that might be. That's what life's all about. Few people get there. But when you get there, it's the best thing in the world because you can spend time with your family. You can go on trips. You can be doing the things that you're naturally gifted at doing all day long. What a beautiful thing. So on the buyer's market phase 2, here's the key strategy. Buy and hold. Buy and hold. Back up the pickup truck, fill it up to the brim. Because what you want to be doing is buying these properties and hold them, and they will appreciate. First of all, you're buying them for below market rents. I didn't talk about value plays, but one of the things I talk about a lot is buying properties that have small problems, fix the problems, and create a lot of value in that. And by doing that, you always buy based on actual numbers. You want to write that down. That's really important. Always buy based on actual numbers, today's numbers. Don't buy based on pro forma. So you're buying for below market rents, below occupancies, value plays like that, things that are easy for your management company to solve. I don't want you solving them. I want your management company to do it. You go out and get more good deals while they do this. You're going to raise the rents. The rents are going to equal what's in the market. You've just taken a property in a down market and then increased its cash flow and created equity. That's a big thing. And then as the market starts taking off in the next few years, you're going to see your equity and your cash flow rise, 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 rise. This is all the additional wealth that you created because you bought at the right time. So that's emerging markets. First of all, I want to say a couple of things. If you are new to this particular group and this is your first meeting, well, first I want to say congratulations. One of the biggest epiphanies I had when I first started investing, now I came from nothing. I was a crazy kid in a rock and roll band for almost 10 years, burnt a lot of brain cells doing that, and then started a landscaping company that turned into a construction company, and then a real estate investment company. And it was the epiphany that I had is when I went to my local real estate investment group, and I saw people there that were just like me, same background, some of them in worse situations than I was, but they were just like me, and they were out there doing it in real estate. And I thought, my God, if they can do it, I can do it too. And that's what you got to realize as well. You are surrounded by a bunch of people right now that are doing it in this real estate market, and they will network and help you do it as well. That's the best part about your local real estate investment group, is the fact that you are supported by people in that group that are like you, that are going where you want to go, and more importantly, have already been there and that can mentor you through the process, and you can get away from all those naysayers out there. So if you're not a member of this group, sign up. Become a member of the group because it's going to be one of your most valuable assets that you have. So until next time, look for emerging real estate markets, follow the cycles, make a boatload of money. I'll see you next time.